Third meeting of the House Banking and Insurance Committee. Please silence all cell phones. We do have a fairly full agenda today. So, Madam Secretary, if you would, please call the roll.
Representative All.
Here.
Representative Bentley.
Yes.
Representative Bray. Representative Duval.
Here.
Representative Frazier Gordon. Representative Gooch. Representative Justice. Representative Lewis. Representative McPherson.
Here.
Representative Rorix.
Here.
Representative Roberts. Representative Smith. Representative Stevenson.
Here.
Vice Chair Lockett. Vice Chair Pollock. Here. Chairman Meredith.
Here. We do have a quorum and are duly constituted to do business at this point. I see some new members up at the podium and the desk today. Representative Roberts, would you like to announce your guest?
Thank you, Chairman. Members of the committee, please make welcome today my guests, my shadows for the day, Fiona and Phoebe Suholtz. Their mother, Ellen, is in the audience today. Their father, Dave, couldn't be here with us. They are 9-year-old twins, and they are doing a phenomenal job of helping me. Let's give them a round of applause.
Representative All, I think you've got a guest as well.
Thank you, Mr. Chairman. Yes, I'm pleased to introduce my shadow of the day. Her name is Ellie Morgan. She's the daughter of Shannon and Carrie Morgan of Bowling Green. Shannon is in the audience with us today. Ellie's 12. She's in 6th grade at the Classical Conversations Homeschool Program. She enjoys working on her family farm, Morgan Polled Heifers. And when she's not on the farm, you can usually find her on the golf course because she's going to be a member of the U.S. Women's Ryder Cup team and become a professional golfer someday. So please welcome Ellie to the committee.
Thank you all. Good to have our guest. Shannon, good to see you as well. At this time, we will proceed with the agenda. We're going to start in order, but we may bounce around after that. So Representative Weber, if you and your guest would come to the table, please introduce yourselves for the record, and then you may proceed with your testimony.
Thank you, Mr. Chairman, members of the committee. Russell Weber, State Representative, 26th House District.
Brian Thornsberry, Chief Operations Officer for the Robert Alexander Center.
Mr. Chairman and members of the committee, we have before us today House Bill 148, which is an assignment of benefits for substance use disorder and mental health treatment centers. To give you a little bit of background on the issue, currently for out-of-network providers, many health insurance companies will not send payment for the services rendered to the patient insured directly to the provider, but instead funds are paid directly to the patients or the insured. The expectation is that they will turn to pay their bill, that they in turn will pay their bills. This is because many of these insurers have anti-assignment clauses as part of their contract. So even if the patient or the insured instructs the insurance company to pay the provider directly, it won't be honored. This paid-to-patient model for out-of-network models has been outlawed in 17 states for all of healthcare, and another 7 states have provided specific provider group carve-outs that bans this practice.
We do have a committee substitute that we need to adopt first. I have a motion on the committee sub by Representative Bray, a second by Representative Lockett. Representative Weber, could you give just a brief difference between the sub and the bill before we take that vote to adopt?
Yeah, the original bill required health insurance companies to recognize a patient's assignment of benefits for substance abuse and mental health facilities only. Under the proposed bill, patients of a substance abuse or mental health facility will be allowed to instruct their insurance agent to assign the pay benefits directly to their treatment provider of choice. Due to the nature of substance abuse and mental health disorders and the severity of the drug epidemic our state continues to face daily, we believe this carve-out for these providers in House Bill 148 is necessary. 148 does not apply to Medicaid or Medicare. What the committee sub does is it substitutes, the committee substitute to 148 is the work product of discussions and negotiations between Anthem and the SUD treatment provider community. The parties have agreed to the language in the committee substitute. The committee substitute does not make any substantive changes to the underlying bill. It simply provides some additional safeguards in the assignment of benefits process between the provider, the insured, and the insurance company. Some of these requirements include submission of a more detailed statement from the SUD and mental health provider to the insured about the charges and the AOB process they will face, a time frame on when AOB claims can be submitted to the insurance company. SUD and mental health providers must maintain claims records, and providers must respond to inquiries regarding the AOB benefits by investigative units. So those are the additions to the committee sub.
So you heard an explanation of that. I do have a motion and a second on that. Are there any questions about the sub before we adopt it? Dr. Bentley?
Did you explain that last sentence with that on audits? Are those, given notice on those audits, or are there clawbacks, or what?
Do you know the answer to that?
Which one is it? Yeah. Claim records. Providers must respond to inquiries regarding the AOB benefits.
Hold on, Representative Bentley.
Jeff Busick, contract lobbyist with McCarthy Strategic Solutions, represent the Robert Alexander Center. That language you're talking about, the investigative language, that was language that the insurance company, when we were talking with them, had asked for, that we would just comply with those sort of that DOI typically does in these sort of settings, and so that is just language clarifying that we will abide by those type of investigations that happen.
Just one more comment. You know, over 50 years of pharmacy, I've been audited many times, and these audits are not transparent. They really are crucial. They really charge you on things that if you don't dot an I, they're ready to pull the whole thing back. So I think you ought to look into it and make it a little more defined. Thank you. Thank you, Mr. Chairman.
Dr. Bentley, if I may for just a moment, I think those address investigative units of insurance companies, which is a common practice to deal with fraud issues and things of that nature. It's not necessarily an audit. It's an investigative procedure dealing with fraud through the insurance companies. All right. Any other questions? All in favor of adopting the sub, say aye. Aye. Any opposed? All right. We've heard, I think, a pretty good explanation. Any questions about the bill as it's amended by the sub now? Representative Rorks?
Thank you. Can you please share if this is an incoil model and repeat how many states have already adopted?
17 states have outlawed the practice of sending the checks directly to the individual in recovery. And another 7 states have specific provider group carve-outs. With regard to incoil, I'm not familiar with that.
It's not an incoil model.
Other questions? All right, this time I would entertain a motion on the bill as amended by the committee substitute. Motion, Representative Lewis. Second, Representative Bray. Any questions? Madam Secretary, please call the roll.
Representative All,
Aye.
Representative Bentley,
Yes.
Representative Bray, Representative Duval,
Yes.
Representative Frazier Gordon, Representative Gooch, Representative Justice, Representative Lewis,
Yes.
Representative Lockett,
Yes.
Representative McPherson,
Yes.
Representative Pollock,
Yes.
Representative Rorix,
Yes.
Representative Roberts,
Yes.
Representative Smith, Representative Stevenson,
Yes.
Chairman Meredith.
Yes. House Bill 148, as amended by House Committee Substitute 1, does pass with favorable expression. Same should on the House floor. Thank you all for your presentation, and thank you for being here today.
Thank you, Mr. Chairman, members of the committee.
Thank you, Mr. Chairman.
Thank you, Mr. Chairman, members of the committee.
At this point, we will skip around now on the agenda. I would like to call House Bill 433, Representative Stevenson, if you would go towards the table. Please introduce yourself for the record, and then you may proceed with your testimony.
Thank you, Mr. Chairman. I am Sherilyn Stevenson. I am the House Rep for District 88. And House Bill 433 is a DFI-supported bill. It was brought to us by the Public Protection Cabinet, and it establishes dates for the renewal and reinstatement of deferred deposit service businesses and check caching licenses.
Got a motion on the bill, Representative Roberts, a second, Representative All. Questions from any members of the committee? Seeing none, Madam Secretary, please call the roll.
Representative All,
Aye.
Representative Bentley. Yes. Representative Bray. Representative Duval.
Yes.
Representative Frazier Gordon. Yes. Representative Gooch. Yes. Representative Justice. Representative Lewis. Representative Lockett. Representative McPherson.
Yes.
Representative Pollock. Yes. Representative Rorix.
Yes.
Representative Roberts.
Aye.
Representative Smith. Yes. Representative Stevenson.
Yes.
Chairman Meredith.
Yes. House Bill 433 does pass with favorable expression. Same shit on the House floor. Thank you, Representative Stevenson.
Thank you, Mr. Chair and committee.
Get your microphone on, say it for the record, please.
Thank you, Mr. Chairman. I would like to register a yes vote on 433.
This time I'm going to turn the duties of the chair over to my co-chair, Representative Pollock.
Thank you. We're ready to hear House Bill 429. Mr. Sponsor, please introduce yourself and your guest, and you may proceed.
Representative Michael Meredith, representing the 19th House District, Edmonson County and Warren County.
John Cooper, representing the Kentucky Bankers Association.
Sorry. We are here today with House Bill 429. It is a relatively simple bill that fixes a real problem, though, for Kentucky banks and financial institutions. We have in our statute a legal lending limit, and national banks have those same statutes at the national level as well. The bill seeks to do two things. First, there is and this, I'm going to start with the second section of the bill and then go back to the first. The second section of the bill deals with what is now a federal parity letter that has been accepted by the Department of Financial Institutions, where they allow Kentucky chartered banks to take part in the regulations of the federal legal lending limit for national banks if it is more advantageous for the local banks in Kentucky to do that. Still very much about safety and soundness, but sometimes, depending on how capital calculations are done, it's more advantageous for a Kentucky-based and Kentucky-chartered bank to use the federal legal lending limit than it is to use the state. And again, that's been common practice for several years now. We just codify in this the federal parity letter that already exists and put that into our statute that you can use the federal limit if it's more advantageous to you. We also, in Section 1 of the bill, address the issue of the state legal lending limit. And the state legal lending limit has provisions about how much can be unsecured debt that you can authorize and how much can be secured debt. It's based on a calculation of your capital again. 20% and 30% are the numbers. The issue is it kind of creates what I would call a donut hole type of situation, because when you reach the unsecured limit, and I would say it's a rare occurrence that any bank in Kentucky is lending out unsecured debt up to their unsecured limit.
Yeah.
But when you reach that or go over it, you're not allowed to issue any unsecured debt whatsoever. And so you may have $3 million, for example, as your unsecured limit. That entire $3 million may be secured by a mortgage on real estate. But when you authorize a $5,000 credit card limit for someone, that's an unsecured debt. When you do an unsecured line of credit for their business, unsecured debt, or even the paying of an overdraft would trigger an unsecured debt situation. At that point, they cannot give any unsecured debt to some of their best customers. And so this just makes sure in the language that you see before you that we take care of the issue so that anything above the unsecured limit is fully secured, but it doesn't create that donut hole between the secured and unsecured limit.
Motion on the bill.
Got a motion by Representative Lockett, second by Representative Lewis. Do we have any questions? Representative McPherson.
Secured and unsecured debt, I just got to ask, are you getting good, solid real estate appraisals to make sure these secured debts are secure?
With all the requirements at the federal and state level, we meet all those requirements.
Great to hear. Thanks, sir.
Representative Smith.
Thank you, Mr. Chairman. John, this may be more for you, but in the past few years, maybe 5-10 years, seems like a lot of small banks, we're talking about having reserves, having these type of donut holes, different things, and lending money out. Have you seen a pattern of more jumbo loans in small banks? Does this have any interference with them on their caps? I mean, their participation in jumbo loans. Am I wrong in saying that there's been a movement to those in small banks in Kentucky in the last, say, 5-10 years?
There are areas of the state where participations have grown, but that's because of demand. For small banks, that's because of demand, not necessarily because there was a big move to jumbos. It's just a matter of you've got not as much loan demand in your community. Several of you represent areas here where they're out doing participation loans with maybe a Lexington Bank or something else. But it doesn't, and I will say this, that one of the things we're concerned about that Representative Meredith is addressing in this bill is parity between state and national banks. That's really important in keeping our state charters, which we really want to do.
Follow up, Mr. Chairman. That was the reason I was kind of leaning towards the practice, is because the larger participation in the jumbo loans gives less equity for communities. And when I say that, I mean, if they're doing well there, they're not as aggressive with their interest in some of these communities. If they're making large loans with the jumbos and they're doing well with them, then it kind of, they can raise their rates a little bit more. You can always tell when a bank's aggressive. The rates go down, they start paying more for different for pricing on money. But if they're not as aggressive, you can pretty much say they're getting out. They're moving their money around rather than it being invested locally. I didn't mean to go into all that. I was just saying, with what he's referring to as the federal and the state and making them on equal terms, I think it would be advantageous for us also to watch on their shifting money for investments, is I guess what I'm trying to say.
I want to take you in a little bit different direction, though, Representative Smith, because one of the things that I think this bill does is it keeps some money on the local books instead of doing participation loans. Give you a perfect example. One of the bankers that I first talked to about this bill had I think it was a $16 million unsecured limit, a $26 million secured limit. And he has customers that are in that $18 to $20 million space, and that bank does issue credit cards. He can't give unsecured credit at any level currently to his very best customers inside of his community. If his customer comes in and wants a credit card, if they need an overdraft paid, which this is not going to happen in practice because they're just not going to be able to pay that overdraft, frankly, or they want an unsecured line of credit for their business of some sort, then they're going to have to go from that person who has $18 million with them right now and is one of their best customers. They would have to then turn around and participate out $2 million to get back down under that amount that is their secured limit or unsecured limit currently. So I think it goes the other way in a legislation like this as well. As John said, we continue to see consolidation in the marketplace, and I think the reason you see a lot of banks taking part in participations today is they've either had an influx of money like a lot of banks did during the pandemic that they didn't plan for. It wasn't in their planned growth models. And so they needed to get that money working some way or another, and they didn't have the local demand for it. Or it's areas where there's just not local demand at all for those loan products. and they're still having to figure out something to do with the deposits that they've got to make a little margin on them.
Yeah.
So we have a motion on the bill by Representative Lockett, second by Representative Lewis. Madam Secretary, please call the roll.
Representative All.
Aye.
Representative Bentley. Representative Bray.
Yes.
Representative Duval.
Yes.
Representative Frazier Gordon. Representative Gooch. Representative Justice. Representative Lewis.
Yes.
Representative Lockett.
Yes.
Representative McPherson.
Yes.
Representative Pollock.
Yes.
Representative Rorix.
Yes.
Representative Roberts.
Yes.
Representative Smith.
Yes.
Representative Stevenson.
Yes.
Chairman Meredith.
Yes.
House Bill 429 is reported favorably with the expression of opinion the same should pass.
Mr. Chair, members of the committee, thank you for your time and consideration.
Thank you, and Mr. Chairman, you're doing a fine job up there.
I second that, Mr. Chairman.
Thank you both.
Mr. Chairman, I'd like to record a vote on House Bill 433. I vote yes.
Mr. Chairman, I would as well. 433, yes.
Thank you. I did.
At this point, if the committee would just stand at ease for just a moment, our last presenter is in another committee presenting a bill right now, should be with us momentarily, and then we'll proceed with the committee meeting. All right, we'll bring the committee back to order. I do see the big. If he would come to the table, introduce himself and his guest for the record, and we'll hear House Bill 170.
Thank you, Mr. Chairman. I know we have several members hopping back and forth between committees here. I am the sponsor of this bill. With me to my right is Dr. Goldberg. We also had another presenter that is unable to make it today, but I'd like to give a brief explanation of what this bill does. As many of you all know, had cancer last year, and one of the big obstacles a lot of times that folks going through treatment phase is there's an issue of, obviously, when you receive radiation or chemotherapy, it does can affect your fertility. That's actually not covered currently under health plans, so this bill would have it covered. I think it's very important to note that the cost is extremely minimal on this, so if you're trying to make a decision of how this will affect rates, I completely get that. I vote on these bills too, and I know you all are very sensitive to that issue. 5 years ago, there was a similar bill on this topic. The data indicated that it would be anywhere between 0 to 4 cents per month, which is, very, very small. What we received this year wasn't an exact number, but they just said it was, basically no consequence. It was minimal. But these, chemotherapy, radiation, definitely has an impact on a person's, fertility. Potentially, this bill only covers sperm or egg, does not cover embryos. I know that was a my understanding, a big issue 5 years ago, a big debate.
We actually have a committee substitute on this bill as well. Got a motion on the sub, Representative Bray. Second, Representative Pollock. Briefly, I know it's a very small change. Tell them the difference in the sub and the original bill.
I've come from another committee and I don't have all my notes in front of me, but the big change was just making a few tweaks to be sure that everything was sufficient with the mandate. And I can't recall. I've just presented another bill and I actually brought the wrong folder with me, but if anybody has that with them, they can explain that for me. But I had my notes and don't have them in front of me now.
Representative Rourke.
The committee sub adds a certificate and a contract to the list of policies covered by the new requirement.
There we go. Thank you.
Coming in for the help there.
There we go. Hope she's a yes.
All right, we've got a motion and a second on adopting the committee substitute. Do I hear any other questions regarding the sub? All in favor of adopting the sub, say aye. Aye. Any opposed? We do have the sub before us. I think Representative Smith wanted to make a motion on the bill as amended by the committee substitute. Do I hear a second? Second, Representative Pollock. Any other questions from members of the committee?
I also have Dr. Goldberg here if you all have any questions for him. He's deals with gynecological oncology and can testify as to the expenses that patients may face if it's not covered by health coverage.
I'm looking around to see any questions. I don't see anybody. Looks like they have one right now. Madam Secretary, please call the roll.
Representative All.
Aye.
Representative Bentley. Yes. Representative Bray.
Yes.
Representative Duval.
Yes.
Representative Fraser Gordon. Yes. Representative Gooch. Yes. Representative Justice. Representative Lewis.
Yes.
Representative Lockett. Representative McPherson.
Yes.
Representative Pollock.
Yes.
Representative Rourke.
Yes.
Representative Roberts.
Yes.
Representative Smith. Yes. Representative Stevenson. Yes. Chairman Meredith.
Yes. House Bill 170 is amended by House Committee Substitute 1, does pass with favorable expression. Same shit on the House floor. Thank you, gentlemen, for being here and for the presentation.
Thank you.
That does bring us to the end of our agenda. Do I hear a motion to adjourn? Second. All in favor say aye. Aye. We are adjourned.